Have you ever wondered why the US dollar is king in the world of money? From your morning coffee beans imported from Colombia to the gas in your car sourced from the Middle East, chances are the US dollar was involved in the transaction. But what if that started to change? What if another currency was quietly, but steadily, making a bid for the throne? This isn't a hypothetical question. It's happening right now, and the challenger is the Chinese yuan, also known as the renminbi. Chinese President Xi Jinping has been very clear about this ambition. He's thus renewed a powerful call for the yuan to take on a much bigger role on the world stage, essentially to become a major global reserve currency. The goal is straightforward: reduce the world's dependence on the US dollar and, in doing so, create what China sees as a more stable and balanced international financial system. It's a move that could redraw the map of global economic power. So how exactly is China trying to make this happen? And what does it mean for the US dollar, for the global economy, and for you? Let's dive into China's strategy. It's a multi-pronged approach, like a grand chess game being played on a global scale. First and foremost is trade. China is the world's factory, the largest trading nation on the planet. For decades, most of that trade, even between China and other countries, was settled in US dollars. Now, Beijing is actively encouraging its trading partners to ditch the dollar and use the yuan instead. We're seeing this happen with major partners like Russia and Brazil, and even some Middle Eastern oil exporters are starting to accept yuan for their energy sales. Every transaction settled in yuan instead of dollars is a small but significant step toward this goal. Imagine you're a business in Argentina buying electronics from China. Traditionally, you'd have to convert your pesos into dollars, send the dollars to China, and then the Chinese company would convert them to yuan. It's a process with extra steps and currency conversion fees. Beijing's argument is, why not just trade directly in yuan? It simplifies things and cuts out the middleman, in this case, the US dollar. Next up, we have something called currency swap agreements. This sounds technical, but the idea is simple. China's central bank sets up direct lines of credit with other countries' central banks. So if a country like Saudi Arabia needs yuan to pay for Chinese goods, it doesn't have to go to the open market. It can just swap its own currency for yuan directly with China under a pre-agreed deal. China has signed dozens of these swap agreements, creating a network that allows the yuan to flow more easily around the world, completely bypassing the dollar-based system. It's like building a series of private financial highways for the yuan. Then there's the push into commodities. The global trade in oil, gas, gold, and other major resources is overwhelmingly priced in dollars. This is often called the petrodollar system. China, as the world's biggest importer of many of these commodities, is trying to break that mold. The Shanghai International Energy Exchange, for example, allows oil to be traded in yuan. This gives oil producers like those in the Gulf an alternative. They can sell their oil for yuan and then use that yuan to buy Chinese goods and services, creating a closed-loop system that doesn't rely on the greenback. It's a direct challenge to one of the biggest pillars of dollar dominance. Finally, you can't have a global currency without the plumbing to support it. I'm talking about payment systems. Most international transactions currently go through a system called SWIFT, which is largely influenced by the West. China has built its own alternative, the Cross-Border Interbank Payment System, or CIPS. Think of it as China's own version of SWIFT, designed to handle international payments in yuan. As more banks and countries connect to CIPS, it provides a viable channel for yuan transactions that is outside of direct sanctions. This is especially appealing to countries that might be worried about US sanctions, which often work by cutting off access to the dollar system. So with all these moves, is the yuan about to topple the dollar? Well, not so fast. Despite China's determined push, there are some massive hurdles in its way. The biggest one is arguably of China's own making: capital controls. The Chinese government strictly controls how much money can move in and out of the country. For a currency to be truly global, investors need to be able to buy and sell it freely, without worrying that they won't be able to get their money out when they want to. China's capital controls create a barrier to that free flow, making global investors hesitant. They value freedom and liquidity, and right now, the yuan doesn't fully offer that. And that brings us to the second major challenge: trust. For all its flaws, the US dollar is backed by the world's largest economy, deep and liquid financial markets, and a relatively transparent legal and political system. Global investors, central banks, and businesses trust that the dollar will hold its value and be easily convertible. This trust has been built over decades. The yuan, on the other hand, is managed by a centrally controlled system. There are concerns about transparency, government intervention, and the rule of law. Building the kind of deep, institutional trust that the dollar enjoys will take a very, very long time. Currently, the dollar still accounts for nearly 60% of global foreign exchange reserves held by central banks. The yuan? It's hovering around 2 to 3%. That's a huge gap. So while the direction of travel is clear, the destination is still far off. The dollar's reign isn't ending tomorrow, but let's be clear. This isn't just about finance. It's about power and influence. The country that controls the world's primary reserve currency has immense leverage. It can borrow more cheaply and can impose powerful financial sanctions by cutting off access to its currency system. The US has used this power extensively. China sees this dollar dominance as a risk and a constraint on its own global ambitions. By internationalizing the yuan, Beijing hopes to insulate itself from US financial pressure and project its own influence. It wants a seat at the head of the table, not just in manufacturing and trade, but in global finance too. So what should we be watching for in the coming years? Keep an eye on the percentage of global trade settled in yuan. Watch which new countries sign on to currency swap deals or start accepting yuan for their exports. Pay attention to the growth of China's SEEP's payment system. And most importantly, see if China begins to gradually loosen its capital controls. That would be the biggest signal that it is truly serious about letting the yuan compete on the open market. This is a long-term strategic game, a marathon, not a sprint. China is playing the long game. The rise of the yuan isn't an event, it's a process, one that will slowly but surely reshape our global financial landscape. We are moving from a unipolar financial world, dominated by the dollar, towards a more multipolar one, where the yuan, and perhaps other currencies, will play a much more significant role. The era of unquestioned dollar supremacy might be entering its twilight, and what comes next will define the economic story of the 21st century. Thank you so much for watching. What do you think? Is the rise of the yuan inevitable, or will the dollar hold its ground? Let me know your thoughts in the comments below. And if you found this breakdown interesting, don't forget to like, subscribe, and hit that notification bell so you don't miss our next deep dive into the forces shaping our world. See you in the next one.